That was, of course, an 18 Now exclusive. Sanjiv Bhasin is now with us. Sanjiv, if the deal of DHFL goes through, as we are picking up from our sources, what do you think will it mean for the NBFC sector as a whole?
Well, it will be a shot in the arm, and the RBI has been insisting that, there is no direct, they will not directly lend to NBFCs, but they have prompted banks. They've given them a window of 1 lakh crore, given them a 10% loss which they stand by for the 6 months. And I think this hesitation is overdone, where mistrust was created. They have viable assets, it's just how fast they can dispose that. And I think all these three things, getting a new partner, converting the debt into equity for, reducing the promoter stake, and in the meantime selling off the assets will be a matter of time. So I think it should be a very big positive going forward, because we think the pessimism is overdone on financial lending, since rates are at a 3-year low, and yet the pass-through effect is leaving all these, this entire system in a quagmire.
Hi Sanjiv, this is Mubina as well joining in. So let's say this deal is announced by IIFL Capital, and IIFL Capital does come at the helm of affairs for DHFL. What is it that they'll have to do to essentially clean up the books for DHFL? Because yes, getting sold and that money coming into the company will be great, but eventually they will have to get in there and really clean up the problematic factors in DHFL.
Well, what's the problematic factor? The problematic factor is the asset-liability mismatch. The ILFS issue has left a hole in a lot of the NBFCs, and that is getting addressed. Now, in the meantime, they are selling their assets, but those assets are taking time to be sold, and it's across the board. I think this is the best time for global liquidity in the shape of private equity or well-managed funds to start to buy these, because these are distressed assets which you are getting. And since cost of money globally is at a low, I think there will be a lot of follow-through effect once this, whatever guidelines we get on the NBFCs today. We would be kindly waiting, but like I said, it will be a shot on the arm whether you give them moratorium for 6 months to run their book, or you convert the debt into equity, get a new promoter, or thirdly, get outright equity participation from some of the private equity or longer-term players. All three will stand in good, because you have to just get through the next 3 to 4 months where a lot of these assets will start to be viably sold off.
Right. When you just talk about such deals in the sector, will it also lead to a lot of confidence as far as, if people want to sell their portfolio, people want to sell their company, there would be some buyers?
Correct. I think, Pankaj, you hit the nail on the head. Confidence is missing. And there is no such thing as it's an asset-liability mismatch. You lend for the 5-year period, and in the short term, the commercial paper and the market collapse. Now, once these deals go through, because there is no problem of good money buying good assets. You saw that yesterday, that there was a 8,500 ETF offer for CPSE, and it got subscribed by 7 times or 8 times. And that tells you that good paper and good assets will always be bought. It's just the confidence which is missing, which is why we are saying I think the markets have overreacted to this, news flow being murky, and some of the FI taxation part, which is again, I think, a very good opportunity to buy, because cost of money at new lows for the government means they will be able to instigate a lot of confidence. And like you rightly pointed out, just 1, 2 of these deals going through will give a lot of confidence to the entire system, the mutual funds, the banks, the leverage players, and some of the victims who are there, who have the assets and who are wanting to sell them but are not able to do so.
Okay, all right, Sanjiv, thanks so much for joining in then and sharing with us your view on this entire deal, DHFL-AION.